So, business jargon, right? People get confused all the time between what's the difference between gross profit and net profit, and what is EBITDA, what does that even stand for? And it's something I get asked about an awful lot. So what I thought I'd do is I would try and bust a bit of the jargon and explain to you some of the key words and what they mean within your profit and loss. So there's different areas of your business, but profit and loss is probably the main one that we're going to start with. So first of all, your turnover. So it's sometimes referred to as revenue or income or top line. And basically your turnover are all of the sales that your business makes. So that is all of the money that you collect. So you sell all of your goods or your services, and all of the money that you collect in a given period, that is your turnover. That's the very, very top. Okay. Now, the next thing that a company would look at is we would look at what is called your gross profit. So between your turnover and your gross profit are all of what we call the direct costs. So the costs that are directly associated with making those sales. So if you are selling products, the direct costs are the physical cost of the goods. So you might sell £100,000 worth of product. To buy all of that product might have cost you £50,000. So your gross profit is £50,000. Okay. So it's the 100,000 less the 50,000 it cost, 50,000 that's left. Sometimes companies talk about gross margin. So margin is a percentage. So your gross margin percentage is the percentage that your gross profit is as a percentage of your turnover. So in the case that I just gave you, £50,000 of cost, £50,000 of profit make up your £100,000 turnover. Your margin's 50%. If you had made £100,000 of the turnover and your goods had cost you £30,000, your gross profit would be £70,000. Your gross profit margin would be 70% because it's the percentage of your turnover. Okay. So turnover, gross profit. The next one down is net profit. Now your net profit is your gross profit less your overheads. So overheads are the generic costs that don't fluctuate, well, to an extent, but they are fairly static based on what your turnover is. So these are things like your staff costs, your things like your rent and rate, business insurance, your static costs that aren't going to fluctuate depending on what your sales are. So all of your overheads are declared after your gross profit, and your net profit is your gross profit less your overheads. Okay, so that is the profit that you are left with at the end of the day. Now, you'll have all heard the saying, turnover is vanity, profit is sanity. Okay, that's because in any business, if you aren't making profit, that's a problem. Okay, so you've got your turnover, we're making our top line profit, but then actually, what is our bottom line profit? Now, when you get into things like EBITDA, so you'll hear us quite often on the Den talking about EBITDA. EBITDA is your earnings before interest and taxation and depreciation. So your EBITDA is all of your, it's another word for saying your bottom line profit. So what happens is when you're a business, you pay tax based on your profitability. So your EBITDA, your earnings before tax, is basically the last line of profit that you've made. That is what you would pay your tax on, so that when you're left at the end, your earnings after tax are what you've paid after tax. I hope that makes sense. So remember, you've got your turnover, then we have all of our direct costs. That will then give you your gross profit. Once we've got our gross profit, we've got our indirect costs or our overheads. They will come next. Then you've got your net profit. Your net profit is the amount of money that you pay tax on. So your net profit, that bottom line down there, is usually referred to as your EBITDA as well. Once you've made your net profit, you would then pay your tax. And then the bottom line you would have, basically what would be in your pocket at the end of the day, is your earnings after tax. Hopefully that explains some of the business jargon that you might hear us talking about and what your different types of profit are and why you need to know the different types of profit.